What is Flex Credential? You had a great tweet on this, but like for those who didn't see it, walk us through what it is and kind of the mechanics of how it works.
So first, a reminder, I think of the networks more as authorization networks than payment networks.
Right.
And why do I say that? Because when you tap that card at a retailer you're traveling to Germany and you tap your card, you've really entered into a legal agreement, ostensibly between the consumer and the merchant, but really intermediated by the banks and the network. And that transaction is guaranteed, even if the consumer doesn't pay, even if the issuing bank fails. At the end of the day, Visa is responsible for that payment to the merchant via the merchant bank. And so really it's about authorizing that transaction. Payment happens later, and there's lots of ways that the payment happens and the money moves from the various banks. So if you think about authorizing a transaction, well, today, when you are given a credential, it comes in a certain type. This is legally my Visa debit card, which, by the way, has different rules, different interchange than my Visa credit card or my signature card or my Durbin debit card. And that has impacts in the way that the merchants pay for the transactions. It has some impacts in terms of the rewards that the customer gets. And so you kind of have this very fixed product, which I think made sense when we had physical cards and a mag stripe, and then we had the chip. But now you're getting different types of funding sources and transactions, and there really hasn't been an ability to have multiple credentials on the same card. Now, Flex Credential is very interesting in that it's a pointer. So when you're issued a card, you're effectively issued this thing called a BIN, which is set up in the network. BINs are actually really interesting. They're issued by banks, but licensed from the networks. So if you want to issue a Visa BIN, right, starting with a 4, that is from Visa. But historically, you've only ever had a single BIN associated with a card or your Apple Pay wallet. In this case, what's happening is as an issuer, I can have a credential that points to other credentials. So what does that mean? It means that at least at the time of transaction, a customer, or at least this is the idea, a customer can select, hey, when I tap this phone, I actually want to use my debit card and not the credit card, maybe from the same issuer. And so you begin to have some control. You've at least gone from multiple cards to a single card. We haven't yet reached the point where the authorization can be on one BIN and the settlement is on a different BIN.
Right.
I think this is the first step to that process. If you look at something like the Affirm card, the Affirm card is very interesting.
Yep.
Because there you're authorizing a transaction, and then Affirm, and it's typed. I believe when that transaction happens, it's a debit transaction. But then the customer has the opportunity to be funded by their DDA, by their checking account, or they can turn it into a loan.
Right.
But a lot of that is managed on the back end by Affirm. I think this is the first step where the networks can offer that kind of functionality to the ecosystem. This announcement, I don't believe is that fulsome. I think this is just at the point of sale, I'm selecting debit or credit. But I think it opens up the door. With networks, you want to think in a sort of like a decade. Like in a decade from now, can we have software select the payment instrument, for me, as opposed to me trying to make these selections, and then maybe can I change my funding source after the transaction?
Well, I think that's a really good way to think about it, and I appreciate you adding that nuance, because the thing that I was struggling with this one, it's so interesting, and I saw that Max at Affirm and a few other folks kind of chimed in about after the announcement was out, like, yeah, we've already kind of been working with Visa on this. This might be kind of the future framework that we build on when we're building things like the Affirm debit card or partnering with other providers in the ecosystem to offer something similar. So in the short term, to your point, Visa's intention here seems to be we want to enable issuers to have more flexibility to tie different accounts or different payment credentials to a specific credential that's used at the point of sale. And so you can enable debit plus buy now, pay later, or debit plus credit, depending on, rules set by the consumer in terms of where they want to use debit versus credit, or, a rule based on, I only want to use my credit card up to this point, and then anything else should go back to debit, or whatever the criteria are that drive that. And I think that by itself is really powerful, right? Like another example I've seen kicked around on Twitter that I think is pretty interesting is being able to tie like tax advantaged accounts into debit cards, such that like if you're, have an HSA and you want to be able to have qualified spending on your HSA so that you're not leaving money there accidentally, you can have a credential that says, hey, anytime I shop here or buy this, it's going to draw from my HSA account. Otherwise, it's going to come off of my debit card, but that is programmatically driven at the point of sale. So to me, just like that, really, really interesting. Longer term, though, to your point, and I'd be curious to get your take on like what this looks like, you could see moving to a, authorization crossing over multiple bins and this working more at a network level than at an issuer level. And I don't think the intention is for that to be true right now, but I could see a huge amount of value to consumers, potentially merchants, in being able to have wallets or whatever sort of abstraction layer you want to think about, being able to direct payments across credentials of different issuers. So, like, how do you think about the short term versus the long term here?
Yeah, so I mean, let's focus on the short term, which is what was announced.
Yeah.
And actually, Simon Khalaf had a great comment on this Twitter thread around this is now the sort of standard around which others can innovate.
Yeah.
We used to type like 196.83 to 121.5 into our browsers.
Right.
Now we just type, Fintech takes, and
yep. Hopefully you get there. Yeah.
Yes, and magically we see all of Alex's great content. This is a little bit like that, where you've got this pointer that's being created by the network, and now it can allow a lot of innovation behind the scenes. So, it's not like the network is going to have this cascading logic of when I tap for fuel, I'm going to tap for my rewards card. When I go to these pharmacies, I'm going to use my HSA card. When I'm shopping at Amazon, I'm going to use my Amazon credential. And so you can now have a lot of innovation that is happening by merchants, issuers, fintech companies, etc. Right now, my understanding is that the Flex credential is really by issuer. So I'm not sure we
That's
can get
my understanding too.
Cross issuers. That would be the next logical step, is that, me as a software company, can you imagine like if Apple were able to issue a credential?
Oh, yeah.
And then allow software to link the other credentials. Well, that would certainly be, a whole new paradigm. I don't know that is going to happen. I think you might get resistance from the issuers who are saying, well, listen, that's my relationship.
For sure.
So unlikely to happen, but that is technically capable. But certainly within an issuer, if you're a large issuer, you think about like the number of relationships we all have, with Chase. Here in Silicon Valley, we've all become Chase customers in the last
whether you wanted to be or not. That's right. Yeah.